My name is Chris Morgan. I'm the adult programming librarian at the Newburgh Free Library, and I would like to welcome all of you this evening for our Newburgh Small Business Bootcamp series. Thank you so much for joining us for our third session. This has really been a really excellent series, and we're so glad that all of you have joined to participate. Just a reminder, we do ask that you keep yourself muted during the presentation itself. There will be opportunities for you to answer questions during the or ask questions during the presentation and at the end. But please do not speak or unmute yourself during the presentation itself. And also, this is recorded for registrants to see afterwards, just so you know this whole Zoom call is recorded. Without further ado, I want to introduce Ellen Fillow from the City of Newburgh, one of our partners on this series.
Hi, good evening, everyone. I'm Ellen Fillow, Director of Community Development with the City of Newburgh. Want to thank our partners, our host, Newburgh Free Library, and our partner with our co-sponsorship agreement, the Small Business Administration, SBA, and of course the New York SBDC, our host, or excuse me, our presenter, Miriam. And we're so glad that you're able to be here, and we're very excited to keep this momentum going as our country starts to open back up and to provide these opportunities for entrepreneurs. And I'd also like to pass this along to Elizabeth with SBA to say a few short words.
Hi, thank you, Ellen. I want to thank Ellen and also the Newburgh Library for inviting the Small Business Station. The Small Business Station is a federal agency. I'm an economic development specialist. And the Small Business Station is here to help you to grow and start your business. Just like Ellen says, everything's reopening, we're starting. Again, a lot of people want to know where to go, how to do things. So we have resource partners. And today we have the Small Business Development Center. But besides the Small Business Development Center, we also have the Women Business Center, we have SCORE, and we also have the Veteran Business Outreach Center. If you want to know where you can find a business counselor, you need to go to our SBA website. And on the chat group later on, I will put the SBA website. The only thing you have to do is go to www.sba.gov and find a counselor. I recommend to see all four. I will speak to Small Business Development Center, a Women Business Center, a SCORE, and if you're a veteran, go reach out to the Veteran Business Outreach Center. You'll feel comfortable who you need to decide to go, and you make that choice. But I always say, always find these mentors with the resource partners. They're here to help you, to give you a one-on-one counseling. Now everything's on virtual. I love free. They help you with your business plan. Not only your business plan, when you start a business plan, how are you gonna market? So now you need a market. You need to come up with a marketing plan. You need a business counselor. Also, you need financial capital. Everybody needs money. You're not going to get 100% financing. They also know the SBA program. I am going to mention one of the few loans that we are starting to do. Well, we have the 7A, and right now SBA is having a sale with our 7A loan program, which is guaranteed from major lender bankers or commercial lenders. Right now, we're not charging no fees, so we're waiving the fee. Okay, so I consider SBA is having a sale. You know, they're not charging no fees on the 7A loan. And the loan goes up to $5 million. Not necessarily everybody needs $5 million. We could do smaller loans, $50,000, $20,000, $25,000. But right now, I think we should take advantage because right now we're not charging no SBA fee until October 1st, 2021. Now that's the 7A. Now another program that I love that's dear to me is the 504. Anytime you want to buy commercial space, I know rent, leasing is so expensive. Look into our 504 program. I think it's a great low program to buy commercial space. And the way it works, the bank comes in, puts 50% in. The SBA with a certified developer company was 40. Now you got 50 and 40, that is 90%. The borrower puts only 10% down. But there are requirements, two major requirements. The first requirement is you have to be in business for 2 years. The second requirement, you have to show that the business occupies 51%. And what I mean by that, let's take a storefront, a building. You have a building, you have the basement, it'll be your storage, you have your storefront, and then you go up and you use one of the rooms for office. You gotta show that the business is occupying 51%. 49% you can rent, but SBA, when you're paying the loan, you can't show that you're using that 49% to pay back the loan. You have to make sure that you're paying with the 51%. Again, our resource partners, I know the Small Business Development Center, the Women Business Center, and SCORE, they know our loan program. These are our two major loan programs that we do. Now, right now, because SBA is not in the banking business, so we guarantee. The only time when we have a disaster like COVID-19, Corona, we have a disaster, we do EIDL loans. With the EIDL loans for nonprofits, what I love to say is the low interest is 2.4. For profit loan is 3.4. Take advantage. Anybody has any question regarding the EIDL loans or any programs that I mentioned today, I know Miriam could answer them. I know I could. So I'm just going to turn this over to Miriam so she do a workshop today. As yours, Miriam.
Thank you so much, Ellen and Elizabeth and Chris, for the introductions. So as mentioned, this is a partnership for tonight's presentation. So we have the Small Business Development Center, the Mid-Hudson region, and the SBA, which is our funder. I'll get to that later. And then we have the City of Newburgh and the Newburgh Free Library. So we all got together and said, what does the community need? And we came up with this, this idea of doing these 4 sessions. Now, for those who participate, you will be sent a link with an email with a link to a survey. In that survey, there's like literally 3 questions. And one of them is, what type of workshops would you like to see? What type of seminars or training events would you like to see? And this is an opportunity for you to let us know what you would like to learn. And we will look at those and decide, you know, in the next year, what programs we can offer you. So I work for an organization that is sponsored by the Small Business Administration, which is a federal program, and it's a nationwide program. Every state is independent of each other. And in New York, we have a few things that set us apart. There are over 20 centers, for one. We have in the Mid-Hudson, we cover like 6 or 7 counties with as many, if not more, satellite offices, although we do everything remotely now, but we have in person in many locations in normal times. And we have business librarians that can do research for you in any shape, fashion, form, for you as you, our client. You just need to ask the questions. If I don't know the answer and I pool into the 200 plus advisors in New York State and they don't come up with answers, then I go to the business librarians or sometimes just directly to them if it's very specific, and they usually come up with an answer, and they're really good. That's what they do full time. They're professional business librarians. So, and that's the one thing that sets us apart. The second thing is that we have access to a database, we advisors, for our clients, that allows you to receive government bid requests. So if you've been in business for at least a year and you want to do government procurement, you can be in that database and start receiving bid requests. So in addition to the one-on-one at no cost to you, there's also all these other services to New York. So I am your presenter. I've been an advisor for 20 years, and I did my first break-even analysis when I was 16. I had this idea way back then. There was no recycling, and I was appalled that all this, you know, paper and cans and all that were going into the trash. So I told my dad, who was an entrepreneur, I said, I want to start a business recycling paper. And he gave me homework, and that was way before the internet, you have to realize, right? It was yellow pages and white pages and calling information 411 on the phone to get certain information and going to the library. And he gave me some homework, and which we are going to do tonight in a little more details. but it's something I've done hundreds of times for myself. Every time I have a business idea, I'm like, oh, let me see if that would make sense. And thousands of times with my clients. So it's a really, really, really great tool to decide whether or not a business would be working. So we had this 4 sessions, right? We started a month ago with how to start a business. 2 weeks ago, we reviewed the business trends. Today, we're doing how to do a feasibility analysis. And in 2 weeks, we have marketing and sales, which is totally, completely linked to what we're doing today, believe it or not. And I'll tell you that in a minute. So today, we are going to, I'm going to show you how you can find a break-even point. Also show you why it's important.
Miriam, it's Ellen. Miriam, it's Ellen. I just wanted to make sure on my screen, it's not, it's kind of cutting off, and I'm not sure if everybody else is seeing the same thing or if it's just maybe my screen.
Elizabeth?
I see the entire slide.
See that? Me too.
I'm not seeing anything. I'm not seeing
Okay, then
anything.
maybe it's just
She's
mine.
good. She's good. Miriam is good.
All right, cool. No technical difficulties, thank God. We'll also talk about cash flow and in more details, and also how much money do you need to get your business idea started. So going to now switch to a spreadsheet. There are different types of spreadsheets, and okay, do you see that? Do you see the pro forma? Okay, great. I have 2 screens, so I'm not sure what you're saying.
I'm seeing it.
Okay, perfect. So this blank pro forma, you're going to receive that in the email, the follow-up email. So you don't have to worry about, you know, you'll get that blank, and you're also going to get the example, which I did not provide to you, Chris, yet to forward because it's not done. So tonight's example to do financial projection is for a restaurant. And the reason I chose a restaurant is that it's a business model we all understand. It covers a lot of basics. So I will show you what I'm doing, but you just sort of need to be keeping track. Okay, so Timur, you can't hear me. Can somebody reply to Timur that he might need to put his volume on and hit the Zoom button at the bottom? Okay, so Noel, yes, the not-for-profit organization can be a client of the SBDC and user research team. Absolutely. So I'm going to try to answer your questions as they go along. If they don't pertain, I might wait till later, in the sense they don't pertain to the topic at hand at the moment. So I don't know if you can see at the bottom, there's a tab that says projection, another tab that says income and payroll, and another tab that says startup costs. So what I like to do is basically start with what is called operating expenses. These are expenses that will occur every month, whether or not you make a sale. So they're fixed. They never change. Your rent is your rent, whether you have 10 customers a day, an hour, a week, or a month. It's the same. That doesn't change. So we're going to review these, and not all of these expenses apply, but I wanted to review them with you because it will give you an idea of how to think about your budget. The first line item is owner's compensation, and that's your salary. That's your draw, what you're going to pay yourself. And the reason it's there first is that you have to take care of your needs. Your personal needs are important. Your family needs are important. And if you don't know what that budget is, that you absolutely need monthly, then your exercise is to basically write everything down. Write all your expenses down: food, rent, utilities, gas, everything. And you do that for a few months so you can get a pretty good idea of what your budget looks like. And if you need $3,000 a month, that's what you need. If you need $5,000 a month, that's what you need. And that's the number you're going to put in here. and you're going to put a gross number, not a net number, meaning you will have to pay taxes on this, or, so we'll account for that. So owner's compensation, I'm going to assume here that this person is looking to make $5,000 a month. It has a family of 4 and only breadwinner, and that's how much this person needs. So if you see, once you're going to play with my spreadsheet, you'll notice that there are some cells that already have formulas. This is a formula bar up here. Can you see that I've highlighted the formula bar? So you basically want to click on the cell and see what's in the formula bar. If there's something in there, just so you know, there's a reason. So little footnote. You will need an accountant, even if it's just to help you with your year-end taxes. You will need an accountant. My line is do what you do best and delegate the rest. So accounting is a specialty. Tax laws are complicated. They change every year, especially now. It's like crazy. So leave that to the specialist. Depending on your type of legal entity and depending on how well you're organized with your bookkeeping, it may be, $600-700 for the taxes or a little more. So since this is a startup, I'm going to put a little more. I'm going to say that it's $1,200 for the taxes. And the reason I've put it as a monthly is because it's easier to budget. So if you know this expense is going to come up, you want to set that money aside. All right. So advertising and marketing, the budget you put in here has to be in line with your marketing strategy. So if you're telling me that you're going to put, 5 billboards in your neighborhood, or within a 10-mile radius of the restaurant, so people know about you, and you have $200 here in the budget, I'm going to tell you, no, not realistic. You're putting billboards at $1,000 a month. 200 is not going to cut it. So you want to think about your marketing strategy in detail, and you want to come up with a budget that fits your marketing strategy. So this is a new restaurant, and I'm going to put that they're going to spend about $600, and that could be $600 that they spend on social media, on Instagram, on Facebook, Yelp. It might be print if they want to put menus out and deliver to all the neighborhoods around the restaurant. There's so many things they can do, but at least now they have a budget to play with. The number one line item that goes out the window when people are strapped for cash is marketing. Now, I want you to think about it. If you need more customers and you cut marketing, does that make any sense? No, does not. So what you want to do is you want to put a budget in there. And if you don't meet your numbers, you want to increase that budget or change your strategy to bring more people. Any questions? Put those in the chat room. Bank charge. You will need to open a business bank account. If you have a community bank or a credit union, they most likely won't charge you for your business bank account. Most commercial banks do. So you want to keep that in mind. Your money is your money, so you have to think about the long-term investment of where you bank. And I always say bank where it makes sense to you. And yes, I will send this sheet and presentation to you, Timur, to everyone, and it's recorded. So bookkeeping, in the line of do what you do best, delegate the rest, bookkeeping is another specialty, and one that you need to have to outsource. So you need to have a bookkeeper that comes to your business a few hours a week, especially for a restaurant. There are a lot of small invoices to pay. And they do the accounts payable and also accounts receivable. They make sure that you're being paid by your merchant account and so on and so forth. So a good bookkeeper, believe it or not, if anybody's thinking of doing a career change, can earn $75 an hour. So it's anywhere between 30 and 75 in this area, depending on your experience and so on and so forth. So I'm going to put here that this person maybe charges in the middle of 50. So initially it might be just like 5 hours a month. And I'm going to leave it at that. It should be, if you get a bookkeeper from the get-go, you don't have to spend $1,000 for catching up. Think about that. So in my $5,000 of owner compensation, I have included health insurance. So I'm not going to put an allowance here, but you have to think that one of the a great retention tool for your employees is to offer health insurance. It may not be something you can do the first year, but it might be like, hey, if you guys are with me for a year, by year 2, we're going to help you with health, paying your health insurance. So we're going to leave that there as a footnote, as a reminder. Internet, everybody needs internet right now. And usually internet and phone, because it's connected, they use voice over internet protocol, VoIP phone. So that's about $150 a month. In insurances, there are a bunch of insurances. Here we're looking at business liability insurance. If you make widgets, you might need product liability insurance. If you sell alcohol, you will need an alcohol license insurance. So you want to make sure you have the proper insurance. Why? Because if something happens, they will sue you, they will sue everyone. So you want to make sure that you're protected. So business insurance. And for a new restaurant, usually it's a little bit more than after you've been in business for a while. So I'm adding here that restaurant's going to have an alcohol license, so it's going to have an alcohol insurance as well. So business insurance can be as much as $5,000 a year, believe it or not. It's very pricey, especially when you're a startup and you offer food to the public. So alcohol is more like $2,500 or so. And then, you might want to lease equipment. If you're not sure what type of cappuccino machine you want or can afford, you have, the $500 machine and you have the $5,000 machine. Well, some companies allow you to lease it. So you can start with the $500 machine. And if that doesn't cut it, you can move up. And then once you know which one you want, then you buy it. So that's the line item where you would put your lease of equipment. Meals, entertainment, shrinking tax write-off, but I'm just leaving it there for others who might want to see it. Well, actually, I'm going to cut it off. Membership fee for a restaurant that will also offer catering for events, which this model does. It's probably not a bad idea to join the local Chamber of Commerce. Every county has a Chamber of Commerce, and sometimes towns have their own Chamber of Commerce. And this is part of your, marketing, because you want to show up. So you basically do the networking events, and you bring goodies for people to taste. You might host an event at your restaurant so people get to know, what you offer. So you have to look at it as marketing, but there are also, there's a National Restaurant Association, and I'm missing a word, that is also a great organization to join. It's not cheap. It's maybe like $400 or $500 a year, but they offer all kinds of industry data and support for the restaurant owners. So it's probably good to have an allowance in there. So I'll put an allowance about a little under 500. Office supplies, it's limited. It's, what do you have? An ink cartridge here and there and another, your paper roll for the cash register, but it's there. So we'll put an allowance. Payroll, I'll come back to that later. Postage, not really relevant. We do everything online now. Professional fees, not really relevant either. So this model, is one where the restaurant owner is renting. It does not own the building, they're renting, okay? And it's not a very big space, but it's in a popular, very high foot traffic area. So the rent is pretty high because that's what they sell the value of the foot traffic, right? Repairs, maintenance on the equipment. Some people start a business with buying used equipment because it's cheaper. So these things will break. And even if they're new, you just need to put a little allowance in there because things do break. So repairs, maintenance, that's for on your equipment and such like that. So I'll put a little allowance, 150 a month. It's possible that in your lease, you're responsible for the snow plowing of the parking lot and the landscaping, the flowers, whatever you're planting around. So it's good to have an allowance for that too, regardless of whether or not there will be snow. You can't predict that, so it's better to put a little something in there. Subscription, not really relevant for this business model. So supplies, these are like cleaning supplies and PPEs. So with the new requirements, right now it's more than it's ever been. So you want a toilet paper, all those things, but it's not related to food, takeout, condiments, not any of that. I'll get to that later. Telephone, I've already took care of that. Training, you might want to send everybody who works for you to basic first aid, CPR. People choke in restaurants, in the kitchens, people, cut their fingers. And there are some also safety features that certain trainings that for hygiene and how to prepare food in a certain way that is good to have for your managers and so on and so forth. So I'm going to put a little allowance here, just so that you have a little something that you can send your folks to trainings. Trade show, not really applicable. So travel, if you have a restaurant and you're going to, let's just say you're going to, Sam's Club to buy things in bulk, or you're going to the bank and you're going to see your accountant. Well, you can account for your miles from the location of your business to that destination and back. It's not you going to the restaurant or you leaving the restaurant and going back home. It's from the restaurant to the accountant, from the restaurant to Sam's Club or whatever. So you can get an allowance, right? It changes every year. IRS sets the allowance that basically accounts for everything, for wear and tear, repairs, maintenance on your car, insurance, everything. This year it's 56 cents per mile. So I'm going to assume that this company is going to put about 100 miles per month in the little trips. Utilities, more than you think, between the heating and the air conditioning and the hoods of the restaurant working and the propane or natural gas firing up the stoves and ovens and all that, it can be substantial. So I'm going to put a good allowance here, about $850. Water, sewage, garbage also could be part of your rent, may not always, so you have to pay that separately. There are some commercial leases where they call it triple net. So it's basically you have a lease for X amount, let's say 5,000 a month, and then you have common area costs that are divided among the different lessors in the mall, for example, and that includes the water, sewage, garbage, and all kinds of other expenses that's added to your rent. So, but in this instance, water, sewage, garbage is a separate thing, and it's about $150 a month. You will need a really good website. You want a website where people can order online and pick up, especially now. We talked about that in the last session. You want to have an online presence and be fully functional. And that kind of functionality of a website is about, between everything, is about $250 a year. So I'm just putting an allowance here. So Tamuri, I think you need to ask, Tamuri's asking a question. I own a hair shop and I want to, wig manufacturer and retail, and I want to travel to my vendor's country, which is in Asia. And will I be able to deduct it? You need to talk to your accountant. There might be a limit to how much you can deduct. Someone was asking also earlier, and I'm going to backtrack, bookkeeping. What type of software? Do you like QuickBooks? So The accountants love QuickBooks because it blends well with their tax software that they use. But QuickBooks is like a Lamborghini. Okay, you look under the hood, and if you don't know what's under the hood, you just don't know how to use it. So it has a lot of bells and whistles, and if you're not familiar with accounting principles, you will put the information in the wrong place. And what's worse than no bookkeeping is bad bookkeeping, because then you rely on data that is not good. Best to invest in a bookkeeper. Okay, and QuickBooks is fine. They were the best marketers, not necessarily the best software marketing software company way back then when there was competition with them. But some different industries have different bookkeeping specialties. So you might, most restaurants use QuickBooks, but you can look around. So these are our fixed costs, right? I just reviewed a bunch of fixed costs, and I'm not talking about the loan that you may need to start your business. We'll get to that later. And I'm not talking either about a contingency. This is there in the sense that if you don't think you've gone through this list thoroughly and you're not sure that you've accounted for all the expenses, then you can add like a little buffer. This is your miscellaneous category. Like, oh, maybe we didn't think of everything. So this, you can leave this in here. It's basically it says it's 3%. I'm going to put 1%. Basically it's a way to ensure that you have enough of that petty cash if there's a little emergency that's not accounted for in those categories, which I cannot think what those would be, but they're there. Before we move on to the next category, you can unmute yourself. We can have a little conversation here, and you can ask questions, and I'll be happy to answer. It's a good time. We can revisit this, but bank fees are deducted. Yes, bank fees are deducted. This is the line item 24. They can be deducted. When I started my first business when I was 20, and my dad, who was basically my business mentor, I said, what do I need? And he said, you need a good accountant. And that was possibly one of the best pieces of advice that he had given me. So I found a good accountant, and I met with this person, and I asked, so how do I keep track of all this, right? And her line was, if a guy in a suit and a tie sits with you in 5 years and goes through every receipt of your business expenses and you can justify them, they're business expenses. In other words, don't try to, you don't want to screw the system, because it's going to come and bite you. So you want to be honest, and you want to take the deductions that you're allowed to take, but you also want to be realistic, so that if you ever get an audit, then you are going to be, you're not going to be stuck with having to tell stories. Okay. And with that, you document. You have to document every expense. If you don't keep a paper, you keep it digitally. You'll need to keep your bank statements, basically think about if you ever were audited, all the things you'd need. So you want to be organized from the get-go, by month, and then by year, and keep everything in an orderly manner. And the reason why the little guy gets picked on is because they don't, the bigger guys who have third-party audits, the IRS accounts for that they've already been audited by an accounting firm. But the little guy doesn't have a third-party audit. So they're sometimes literally like picking numbers out of a hat and saying, okay, let's go look at the little guy. So especially if you're successful, you started at nothing and 5 years later you're making, $1 million sales, they will want to make sure that you've been, using proper, that you've been paying all your taxes and all that. So the other, and if you have a question in the chat box and I'm ignoring it, it's because I'll answer it later, just so you know. So the next thing we're going to do is going to the startup costs tab. Okay, the startup cost tab has a few categories. It has a purchase of equipment and prepaid expenses and leasehold improvements or renovations. So purchase of equipment is basically, in this instance, the person who leased the space did not have a refrigerator, so we have a refrigerator we need, and that's, and then a walk-in fridge, and then of course a range and hood and everything you can think of. This is a long list. We need the microwave, we need the pots and pans, we need everything. So basically a long list here that will add to be about 20, I'm going to put a number here like 25,000. Okay, 25,000 in equipment. And I want you to follow me here. If I go back to the projection tab and I look at my, I look at this section here, which are cash flow adjustments, there is my 25,000 in purchase of equipment. I linked it. Okay, so you can do that. If you don't know how to do something with a spreadsheet, Google it. Every other day, I'm like, oh, gee, I wonder how to do this. I Google it and I get the answer. So basically, you want to get familiar with spreadsheets. It's so useful. It's so useful. So prepaid expenses. These are all the expenses that you have to spend before you even open your doors. That would be legal entity. If you file for an LLC, it's $1,500. If you file for an S Corp, that's about $850. I really encourage you to think of a legal entity that helps separate your personal assets from the business, so that if something happens and you get sued, I don't know, somebody, food poisoning is what comes to mind, right? 100 people get sick, big class action, and your coverage for insurance is okay, but not great. They will then go after your personal assets. If you have one extra layer of protection with a legal entity that separates you from the business, it's better. So if you recall in the first sessions, for those who were there, we reviewed business entities, and one of them was a business certificate from the county clerk doing business as. Well, that's just like you. That's you personally doing the business. So not encouraging that. So I'm going to put here that they decided to file for an S Corp. Legal only because they had to review the lease. They had to review some other documents with providers. So they hired an attorney to look at those documents. Insurance, even though it's in my projections here, right? All my insurance is like already in my budget. I have to pay it first. So we have here 7,200 insurance that we have to pay up. Ooh, I forgot something here. In startup costs, liquor license. So I'm going to put that here. You have to pay it up front, especially in the beginning, because they don't know if you're going to be around in 6 months, so they want you to pay up front. Marketing, having your website done properly and all that, and putting a signage out, doing your initial marketing, buzz before you even open your doors can be definitely a couple $1,000s. Security deposit, first, last month rent, utility deposits and all that. I don't remember what our rent was. Our rent is 7,000. So, so we have here at least 14,000 plus a couple of thousand in utilities, electric, gas, and all that. So we're looking at 16,000. And if you don't believe those numbers, it's fine. But I can tell you one thing: I have never ever had anyone come back to me and asked, is it, and tell me that we were off, like that we were way off. If anything, we're always under. So I want you to keep that in mind when you're putting numbers together, is you want to be realistic to high. A point of sale system, get one, especially if you have a restaurant. So the good ones can be pricey, but this one, I'm just gonna make it a number here. Liquor license can be about 2,500. So total prepaid expenses, we have 30,000, and this is in our prepaid expense right here at 30,000. Then we have some renovations, right? You might have paint, tiles, all kinds of things that you need to boot, you know, a kitchen, a counter, bathrooms, whatever, right? And I'm just going to throw a number in here of 25,000. Okay. So our renovations are here, leasehold improvements, 25,000. Okay. So we are now going to go to the income tab. And the reason you want to play around with that income tab, make your own. This is, you know, I made this so we wouldn't lose time tonight, me making it up. But if you don't know how to use a spreadsheet, and this is a good way to learn. In the sense that you want the spreadsheet to give you the information that you need. So here I have month 1, 2, 3, okay, to 12. So there's a couple ways I can do this, which we'll do all three ways. The one way is, what do I need to break even, right? How many lunches at $12? Actually, let me put that as a $12 so that it's clear. This is $12. So the lunches are on average $12. The dinners are $22. And our alcohol, because we have beers that are $5, but we have drinks that are 10 or 12. So I'm averaging it to 8. So you basically want to have an idea of how many patrons are going to come every day for lunch, and how many patrons are going to come every night for lunch, and how many of these people are going to buy alcohol. We'll get to catering later. The hours of operation for this restaurant is Wednesday through Sunday. They're closed Monday, Tuesday, and they're open for lunch and dinner, and late dinners. So they're open 12 hours a day, and for those 5 days. So that's 60 hours, right? So that will determine, helping us both figuring out how much income. We'll figure out how many people we need to hire, how many hours they will need to work. So we'll get to that. They're linked. These two, the payroll and the income, is somewhat linked, because the more you have, of course, the more you have patrons, the more you'll need help. But we're going to start bare bone here. And we're going to throw numbers. We'll just say there were 50 patrons. We're going to do the first break-even analysis, right? How many patrons do we need to see every day for this to work? We are opened, so that's 4 days a week. I said Wednesday, that's 5, so 20 days per month, okay? So every month. And then for dinner, we have, we have a pretty good sized restaurant, and we have 3 turns. So we might be able to get 75 people. And again, that's 20 days per month. I'm just throwing a number and we'll see when we get back to the spreadsheet. It's linked. We'll see if it works. And then for alcohol, I will assume, I'll put a little formula here, that half of the people that come, or actually less than half, let's say a third of the folks that come will basically ask, grab alcohol. So again, 20 days per month. So you can play with that. Initially, when you're starting, you don't know if a third of the folks are going to take alcohol, or it'll be, or 90% of them. But we're making an assumption here. It's better to give numbers than no numbers. And then you compare those with reality when you start. We'll come back to catering. Front of the house for payroll, we'll need at least one person, right? We'll pay this person $15 an hour, and this person will work, well, she or he won't work 60 hours a month. Oh, okay, so we need 2 that work 30 hours a week. The reason why I want to do that is because it's easier if you have 2 people that work 30 hours a week and one of them is sick, they can fill in for each other, right? If you only have one person and that person is sick, you have nobody to fill in. So it's always good to have, 2 people that work not part-time, but, that can put more hours, so that you have some flexibility. So you have wait staff, again, same thing. Actually, I'm gonna put 3 because during dinner we need 2 wait staff. They make a little less because they get tip. So I think it's $10, and they work, I'm gonna put them at 30 hours a week. Yeah. And then busboy, dishwasher, again, same thing, same principle. And 30 hours a week. And the cook, the chef, we need 2 chefs. They can make up to 30 or more an hour. You're not in there because you are going to be the person that plays all these roles, whomever doesn't show up and you can't fit in somebody else. So it's good that you are the person that can take over. If you are the chef, then that's great. You don't have to have a chef. But it's good to have a person that can help you in case you need to leave somewhere, or you're sick or whatever. Lenders will want to see that you've made that sort of thought, that you've thought of that. Sous chef, only for dinner, and this is a person that, chops everything. So that's what we have. And a little sum here. So I'm going to link that payroll with this number. And then payroll taxes are about payroll taxes, workers' comp, disability, all your share as an employer is about a little less than 20%, but give or take. And I'm going to add in this formula that your it's not also the payroll, but it's also your draw here that is going to be accounted for, so that it's accounted for. All right, so we have, hold on a second. Okay, I didn't put any, okay, so for, I left some things to show you how to add things and change, just so they see how to work with a spreadsheet. But you'll get all this like as is done after we're all done. So we have food costs is about 30%. If you offer fast food, like McDonald's, it's more like 10-15%. If you offer farm to table and organic and all that, it might be more like 35 and sometimes 40%, but you have to price your food costs, your prices accordingly. So it should be about 30% to do the right thing. I'm going to add another line, which is alcohol. Alcohol is about 15%, and this is also something for you to think about. If you are selling widgets and you're going to pay those widgets 40% to your manufacturer, well, that's where we go, 40%. And the reason why this is a cost of goods sold is because it's a variable cost. And what that means is that if you have a lot of customers, you're going to have a lot of food costs, right? Your food costs are going to go up if you have a lot of customers, or your food costs are going to be down if you don't have a lot of customers. Same thing with alcohol and whatnot. And Tamar, you have a lot of questions, and I'm going to suggest that you sign up for one-on-one business counseling so you get all the attention you need, because I cannot answer all your questions tonight, unfortunately. And they're all good questions. So sign up. You'll get the link. Everyone will get the link later tomorrow. And, you know, it's free. You can just click register and you will get all the attention you need. Okay, so lunches and dinners, and I multiply that by 30%. And this is basically what it's my food costs are going to be for those. Alcohol, I go to alcohol, and it's 15%. So that's going to be my replacement cost. And then labor, we'll talk about that. That's for catering. Merchant account fee, I'm going to assume that about 90% of the folks that come to my restaurant are going to use their credit card to pay, and I encounter a 2% or 1.7% fee. So that's going to be here times 0.9 times what did I say, 2%? Okay, so merchant account fees add up. So you want to shop and find the best merchant account for your business model. And by that, I mean, let's say you sell furniture, right? And the furniture is a piece of $5,000 furniture. Well, sometimes it's better to spend a monthly fee with a merchant account of like $30, $35 a month, but have a much lower swipe fee of like, let's say 1.2%. So that every time people pay with their credit card, which they probably will for a big ticket item like that, you pay the least amount for the swipe fee. So there's a math to be done, and depending on your business model and the size of your of the purchase from your customers, there's a math that makes sense. Right now, Square Up is very competitive, especially in the restaurant industries. You've probably seen those terminals. They're white. And they're very convenient, and they also match with a point of sale system, and it's very well done. And I think it's 1.7 for their swipe fee, but I'm going to put 2% here. And they don't have to pay monthly fee either. So things to think about. So I threw some numbers, right, for income, and I wasn't sure what it would look like, and we're not that far off, but we're almost $5,000 short. Plus, there's one more expense that we didn't account for, which is going to be added now. So cash flow, and then we'll come back to this. Cash flow adjustments. So cash flow adjustments is basically what happens after everything is said and, before you start your business. And it would be like, okay, so you have $30,000 in cash to start your business, and you will need a loan, right? You will need a loan because you need to buy equipment, and you need to make renovations, and so on and so forth. You need to buy initial inventory, which we'll get to in a minute. I'm going to remove goodwill and purchase of building because we're not going to deal with that today. Goodwill is if you're purchasing an existing business, and part of that cost is, of course, the equipment and everything else, but also the intangible, which is how long they've been in business, their client following, their reputation. All of that is not a tangible asset, but it's called goodwill. So that's why it's there. But we're going to take that out right now because you are starting from scratch. And you will need to borrow about, I'm going to say, you will need to get about $80,000 loan. So if you get an $80,000 loan, over 5% over 10 years, I'm going to assume, because that's how much they'll go based on your lease, and your lease will be about 10 years. This will be your monthly payment, $848, but it will be partly principal, right? This is the column for principal. This is the column for interest. And in our projections, they are separated because IRS lets you take interest as a business expense, but not the loan principal payment. That's why they're separated. So now you have an additional, that affects your bottom line. You've heard about the bottom line, right? What matters is the bottom line. You need number, you need to be in the black. Well, this is your bottom line. And right now we're not in the black. We're in the red, because this is how many thousands of dollars we're short every month. So just so you know how to do a break-even analysis, we have to do all of this, populate this whole spreadsheet, so that then we can come back here and go, okay, so 50 was not enough. Let's see if 75 is enough. And I'm going to do this a little differently right now. Link those so that when I change that one and this one, we need, I'm going to say 125 per night. And so, and if you notice, the formula here changed because I had already linked that to a third of the patrons are going to get alcohol. So I don't have to change that one. It's already done. So let me go see here. Ooh, now we make money. Okay. Why is that? Hold on. 514. Why is this different? Do you see how much money we're putting in the bank account? And then all of a sudden it's like nothing. So there's a formula somewhere that's a problem. Did I miss something? Dinners. I missed something in dinners. Dinners. Oh, right. Look. I missed, yes, the last month, Judy. You got it. So, okay. So now I'm going to change it so that I'm not making so much money, but just enough. So you play like this. You basically play with the numbers until you find that magic number that says this is how much you bring. Okay, so I'm still bringing 6,000. I want the break even. For me, it's not zero, but it's close to zero, meaning that you take care of all your expenses, and at the end of the month, there's nothing left. That's completely a break even. So play a little bit here. So come back. Okay, we're getting closer. I mean, it's really fooling around like this. Okay, that is as close as it'll get for me to do a break even. It's $200 up, on top or above zero is pretty good. So why I did this is because these are the numbers of patrons that I will need to bring in every day that I'm open for lunch and dinner to make this work. If you have a restaurant with 4 tables of 4 people, so that's 16 people, right? That means you need like 4 turns for lunch and like 6 or 7 turns for dinner. It's never going to happen. If you have 20 tables that can sit 4 people, so that means for lunch, you almost need to fill your restaurant. And for dinner, you need to fill your restaurant. It's 1 turn. They call it a turn, which is possible over time, in the sense that it will take a while before you get to that point. And that's the next exercise we're going to be doing right now, which is the reality is you're not going to open your restaurant and be full. I mean, if you are, honestly, no one will ever complain, right? But if you're not, then you need to be prepared. So what you want to do is you want to put the worst case scenario. And the worst case scenario is that you start with less people than you need, right? So we're going to start that you have 10. Okay, so 10, I'm just going to go up like 20, 30, 40, actually, yeah, 40, and then 40 plateaus a little bit. And then, okay, so 50 for the 3rd quarter, 2 months at a time, 60, did I miss something? Okay, 1, 2, 3, 60, 70, and then what did we need, 80? I forget. Anyway, We'll get to that at the end. So you sort of create a progression. And the reality is, and I'll be honest with you, you are throwing spaghetti on the wall and seeing what sticks, in the sense that nobody can predict the future. You can only make projections based on realistic assumptions, which in this instance are completely linked to your marketing strategy. If you open your doors and nobody knows you exist, and you're not making any effort for anyone to know you exist, it's going to be really hard to fill. But if you have a robust marketing strategy and people are excited by you opening up because it's unique and whatever, and you've created a lot of buzz before opening, it's very likely that you will be able to meet those numbers beforehand. But usually a restaurant operates in the red for a couple of years, and sometimes more, and sometimes always. A lot of restaurants don't make it. Bad business model, but in the sense to encourage you to start a business, but it's a hard business. It's a really difficult business because of there are so many variables that depend on it. And now look at this, who could have predicted a year ago that restaurants would have to close like 3 months? Nobody. So it's just a difficult industry. So I'm going to assume similar growth here, but double, right? So let's see what it did for, you're going to see what it did for our projections. This is what it did to our projections. First off, we are in the deficit, right? Way greater than the previous break-even analysis, because we're not breaking even. We are starting until we get to the point where we break even. And this is pretty aggressive. I really doubt that in 5 months you would break even, but that just gives you, this is just to show you how much cash you need in your bank account to make this work. And this is a pretty good scenario in the sense, I'm not going to go back and forth just to show the principle that you need more money. Okay, you need more money. So this basically means you need at least probably in the best case scenario, another $100,000 in your bank account. Costs a lot of money to start a restaurant, a lot of money. Not all businesses are like that. I could have used a daycare. I could have used all kinds of other types of businesses. And the reality is you all need cash flow. So this is cumulative cash flow, right? Monthly cash flow is how much money you're putting in the bank account or taking out of the bank account. This is, in parentheses, is taking out of the bank account. And then you're starting to put money in the bank account. Cumulative cash flow, well, your bank will not let you operate because you're in the red. So you would need, I'm just going to throw here, instead of 30,000, you would have 130,000. So I start with 130,000 of my own money, and I put all this money in my bank account so that I can float. That's what it's called, cash flow. You float so you have enough money in your bank account to pay your bills until you can break even. So this is the second thing, cash flow. How much money do you have in your bank account to make it work? So this is super important, regardless of your type of business. Even if you're a one-person show doing yoga in a yoga studio, you still need to do this math to figure out how much money you need to start to make it to the point where you break even. Any questions? Now is a good time. You can unmute yourself and you can ask questions. We'll have a little time to talk because I'm almost done, believe it or not. And I know this is a lot. We're nearing the level of absorption here with the spreadsheet. So I'm aware that it's hard. So the next thing, which I did not talk about when I was here, was month 1, 2, and 3, and 4, and 5, and 6, and 12, up to 12. There are industries where there's an incredible amount of seasonality. So you have to account for seasonality. So it's basically, it could be a bell curve. So usually restaurants do better from April through October, even May, but April through October. And then things, November and December, there's these little peaks because of the holidays and office outings and whatnot. But January, February, March, it's really hard. So you need to have enough money in your bank account to make it through those months. So another good example of seasonality is if you are, say, doing a farm stand, right? Farm stand is June through November. So you still have insurances, you still have a lot of expenses that you have to pay from December through May of next year. And you need that money in the bank account to make it work. So seasonality is another variable that you need to consider. So we don't know when this restaurant is opening. Is it January? Is it July? I'm not going to play full around just to demonstrate, but all I can tell you is that it will affect your cash flow. So you need to be aware of seasonality. And if seasonality is something that's going to be important for your business, you need to account for it. Make sense? So I'm working with a client now that do landscaping and design work and maintenance work. So their big thing is, I think it's May. They start in May because they can clean up and up to November. But like I said, and this is a full-time position for the owners, which there are 3 of. So they need a full-time salary. They need a full year salary. So from December through April, for 4 months, when there's no income, there needs to be enough money in the bank account to pay all their bills, the phone, the marketing, because they're doing marketing already, their website, their payroll of the 3 owners. So that's why it's important to do these spreadsheets, is so you can plan ahead, especially if you have seasonality. So I know your head is probably spinning now, but
Miriam, how long is this loan? What was the term for this?
the term.
The 80,000. What was the term?
Oh, the term, I just threw this as a 5% over 10 years.
Over 10.
We talked about the funding process in the first session in terms of what is needed from lenders and what are the requirements. So I'm not going to talk about it now, but yeah, you should go back to that session if you want to look at how that 80,000 would be secured and given and all that. So this spreadsheet is as good as it gets. Catering is another source of income I didn't talk about, but I wanted to give you that as an example. $30 per head, the size order, you have to account for labor. So labor would be here instead of down here because it would be based on events. That's actually why I did that. So I can show you that even labor in some instances can be a variable cost depending on the event. But for catering, it's definitely up here because it's completely dependent on that event. So, so this is an example of a restaurant. And that's all I have to say about the spreadsheet, so that you hopefully got the whole idea here was, do I break even? How much money do I need in my bank account to make this work? And you account for as many expenses as you can think of.
So in this example, this owner of the restaurant should have 210,000 to start out with.
Yeah. And that, trust me, that's not a lot. It's not a lot for a restaurant.
That's why I'm asking.
Yeah, I know. That's why I'm like, this is not like, look, in this scenario, it breaks even at month 6. Like I said, they usually don't break even for a year or 2, sometimes more. So like I said, I could fool around with the spreadsheet, but I just want you to get the principle. The bottom line is you need to know what you need to break even, and you need to know how much money you need to get this to the point where you break even. So that's the whole idea of doing this exercise. And I would not do it alone. I would really not do it alone, because it's overwhelming, and you're most likely going to underreport, because it gets overwhelming really quickly. So best to do this with your mentor, business advisor. If some people want to pay their accountant to help them with that, that's fine too. They'll do it for a fee, but we do it for free. So you have options, is basically what I want to say. And, you know, I chose a restaurant, like I said, because everybody understands the business model, but this is good for any model, literally any model. You just need to customize a little bit left and right. So now is a good time to ask me questions. You can either go into chat or unmute yourself. I really encourage you to, if something wasn't clear, if it was not clear to you, it may not be clear to others. Okay, so just don't be shy to ask questions.
Realistically, should you have a year or two's worth of expenses saved or access to that type of capital? Because I don't really see here, you're talking about the loan and you're talking about the owner's actual cash or equity, I guess. But what about like business income? Is there someplace else to go if the owner falls short?
So, really good question. So many businesses don't make it because they haven't done this exercise.
I hear you.
So many businesses don't know what they're getting themselves into, and they run out of cash. They get into debt. They start putting things on their credit card, which is a big no-no. Don't do that. It's a hole that you dig yourself. Best to ask for the money you need up front. It's really hard to go for second loan. It's really difficult. So it's best to go and ask for, you know, or raise the capital that you need rather than having to go back. That makes sense? Because, you know, going back is just, they're going to say, well, you've been in business for a year and a half and you're not breaking even. Well, we're not sure we want to give you money. Whereas a year and a half before, if you wrote, you know, if you were able to raise enough money, you might have not been in that situation. So you have no idea how many times I've been in the middle of dinner and going, oh, there's a business idea. And I would run out to my computer and do something like this, because some business models are simpler, right? I had a business with a partner as a tour operator, creating custom itineraries for travelers coming to the Hudson Valley, whether they were individuals or group. We would just customize an itinerary for them. So that was like 4 line items, really. It was nothing, okay? So there's some business models that are much, much, much simpler to do the math. I wanted to go line item by line item with you guys so that you learn something. And don't forget, if you do yours, that all these expenses do exist. So, but there are some business models that are much, much simpler, much simpler.
Are there resources for business grants so that folks don't have to go into debt? And would that be something that you'd be able to assist us with?
So the big urban legend here is that there are business grants. You have no idea how many times I was told when I was starting a business, you're a woman, you're a single parent, there are business grants. And I looked and looked and looked and looked, and God honest truth, between you and I, if business grants existed, I would be here. I'd be getting those business grants. It's unfortunate, but the reality is that foundations who give grants to not-for-profit. By law, they can only give them to not-for-profit. There are some programs where the government does offer grant money, but it's very specialized. It's usually for research and development, and I don't want to get into those details, but it's really, really specialized. So the long story to answer, no, they don't exist. And if anyone tells you, just ask them, say, go look for them. Go look for them and get back to me. If anyone sells you anything, like buy this $10 guide and you'll know where all the business grants are from. Well, they're selling you a $10 guide. I just have to warn you. So in session number 1, I talked about fundraising and discussed the different sources of funding, and one was crowdfunding. So that is a more creative approach that sometimes works, sometimes doesn't work, but it's really hard to get capital to start a business. It just is. And sometimes, you know, I say, don't kill the vision, keep the vision, but you have to work it in baby steps. And, you know, I have a client who, rather than opening this 5-star restaurant, is going to have a food truck. So you start with the food truck and you build an audience and followers, and then maybe you can get the 1,000 square foot tiny restaurant, and then you can expand to the 2,000, and you know, you work baby steps. A lot of companies started like that. I have another company that they started in their garage, and now they have a 30,000 square foot manufacturing plant. I mean, stories like this do exist. It's a lot of work, but they exist. All good questions. So someone is asking, I did not attend previous classes. Can I get the recording and presentation sheets? And I'll have Chris answer that. If Chris, you're listening. He's the one that sends all these emails. So I'll make sure that he sends those. Right, because those people who signed up after, I'm just thinking out loud, people who signed up after the first session missed the first session. So
in this example that you've shown us tonight, what would be ideal in terms of the financing that this owner should really have up front, especially based on what we may know in terms of, let's say maybe in the next 6 to 12 months of opening this up? I would hope that that's post-pandemic.
Yes, yeah, we're not, pandemic is not even a variable in this scenario.
I understand. I definitely get that. But I'm just saying, what would have been more ideal? Because this 210 just doesn't seem to be enough.
It's not enough. But another variable here that we cannot get into too many weeds, but one thing you do is you create a spreadsheet like this, you let it rest, right? Because you can't do more than an hour. Most people cannot do more than an hour.
Yes.
You go back to it and then you polish it up. And the way you polish it up, and you say, is my payroll realistic with the amount of meals I have to create here? And is my payroll realistic with the amount of meals I have to create by month 12? So the payroll basically should reflect the need to serve your client, your customers properly. So I did not even do that kind of finesse. So there's a lot more to this math than what I did here. And of course, this is a fast, progression. It's probably more realistic to say it's going to be 10 and then 20. I'm going by quarter instead of by month, and then 30. And then you'll see the difference and how much money it really is. 30 and then 40. Okay, and then okay, and I just adapted. Okay, good. So then I go back to the projections, which are much lower, and look, I'm $100,000 short, which is more the reality. The reality is you're not going to break even the first year in the restaurant. If you do, no one will complain, I can guarantee you. But you have to plan that you won't. It'll take you a year or two. So now we're at 2:30 and we're still short, like a little bit. Make sense? Does that answer your question? Okay. If you have signed up for tonight's session, Chris has your email. So I'll just tell him to send you guys the presentations that you missed. So you don't have to be too worried. So I know this was a lot. You'll get a recording. You can listen to it again, and you can, most importantly, you can, I really encourage you to get an advisor, and don't do it alone.
Miriam, just as a follow-up, we're getting the spreadsheet also.
You'll get the spreadsheet. You'll get this spreadsheet. I have to
Yeah.
download it. Okay, so I was working. I'm not done. Wow, you're reminding me. I have my PowerPoint here. Hold on. I have one more thing to show you. Share screen. That's screen 2. Okay, so where are we? Okay, so we learned tonight how to do find a break-even point. We learned cash flow, and we also figured out how much money would need to make it work, right? And spreadsheets, you can use Microsoft Excel, which a lot of people like, and you can use Google Sheets, which are free. So Google Sheets are what we were working on tonight, which are a little different than Excel in very mild differences, one and the other, but they do basically the same thing. So you use whichever one you want. You'll get the those spreadsheets as Microsoft Excel spreadsheets tonight. Tomorrow by email, but you can upload them in Google and convert them into Google Sheets. That's perfectly fine. So a little review. We learned that operating costs are all the costs that don't change, right? These costs are always there, whether or not you have you have customers. They're always there. They're fixed. We learned that cost of goods sold are variable, meaning that if you have more customers, it will go up, and if you have less customers, it will go down. We also learned that we have startup costs, and you need to write these down and write everything down. Like I'm realizing now that in my spreadsheet, I did not even account for the initial inventory of alcohol and food and napkins and everything else you need. There was a lot that we missed tonight. It's a broad stroke just to show you how it works, but there were a lot of details that were not there. You need to have a sound pricing strategy. So it has to match basically the food offering, the menu, who you're targeting. It's all linked to your marketing strategy, which we will talk about in 2 weeks. And in your startup costs, you'll have equipment, furniture, fixtures. You'll have prepaid expenses, which are all the costs that all the things you spend money on without nothing to show for. There's all the soft costs. You'll have leasehold improvements or renovations, even if you're just putting a fresh coat of paint. You'll have your initial inventory. And yeah, so these are the things that you will all need to account for. And this is the website you can go to get information about our organization. And also you'll see there how to get an appointment. You click on that and you'll be assigned an advisor. You will be also emailed the survey link. So please literally takes 10-15 seconds. It won't even take you a minute. Open the link, fill it out. It gives us a lot of information, and our sponsors, the SBA, need it. So Elizabeth is shaking yes. So yeah, that would be great. We have like 5 more minutes. If you have any other questions, you can unmute yourself and ask. And Chris is going to, I think, include my email And I don't mind answering a few questions here and there, but if we're getting into details, I'll say just sign up for a one-on-one, because
Yeah, I'll include the contact information for the organizers like I did in that first email, and the link for the past 2 sessions so people can watch those.
Thank you so much. And if you can attach
the past supplementary materials, I'll send along as well if people want to kind of play catch up.
That's awesome. So if you don't mind, Chris, sending by session so people don't get too confused as to what.
Sure.
Yeah, so you'll get 3 emails basically.
Miriam, another question. So with the feasibility studies, would we have that by sector or by industry? We have something to compare. So use the restaurant, and it's in Orange County. Do we have averages to what restaurants gross in Orange County or how profitable they are? So if we are developing a restaurant, we have an indication of what we should expect.
So the question is, can we get industry data when we're starting a business, given whatever industry we're in? So you have some data that can be found from trade associations. Sometimes this is public. You can Google it and you find all kinds of trade associations share that data. There is, of course, some very specific data per trade that can be found in publications that neither you or I could afford, but our business librarians have access to. So if you're one of our clients and you want specific data, we can get that for you. And that really helps. And there are definitely averages. And then the different regions, of course, different averages, but you want to benchmark and then use your own judgment.
Thank you.
Welcome. 3 more minutes. By the way, I commend you all for showing up. It was a beautiful day today. We didn't think anybody would show up tonight. So, and this was not an easy topic. So kudos to you, all of you, for showing up for yourselves. I hope you learned something. So you'll have our contact info.
Miriam, this was really great. This was a good topic.
Yeah, thank you again.
No, I wanted Elizabeth to, she mentioned some of the loans and it went over kind of fast. You're talking about 501s and section 4s. Yeah. Can you just quickly tell us that again?
Well, we got, and again, the best thing right now, you have a business counsel right here, Miriam. They know the SBA programs and services. But if you go to our website, and I'll type the SBA website, it talks about the 7A, the 504, and the microloans that we have. These are our programs, and these are guaranteed through our major commercial lenders. When I mentioned the 504, is because it's for buy commercial space. I mean, you could buy machines and equipment, but it's basically banks use it for buying, purchasing. I'm losing my voice now. Commercial space, because the great thing about it is that the borrower only has to put 10%. And I know when you hear 10% buying a piece of property, you want to jump on it, right? But there are requirements. So you really need to sit with a business counselor. So a business counselor can go step by step, but you got to meet the requirement before you get that 10%. So what I'm going to do, I'm going to put my telephone number, my email address, and the website. Feel we could have that one-on-one call. But I'm going to suggest you guys speak to a resource partner. Miriam, you did an excellent job on the spreadsheet. I mean, first time I sit and listen to, I mean, you cover everything on a restaurant. Great job, okay? So, Noel, I hope I answered that question, but I'll put my information on the chat, okay?
You did answer it, yes.
All right, everyone. 2 weeks from now, we're doing sales and marketing, because all these numbers that you need to generate have to come somewhere, and they have to come from people buying your services or goods, and they won't know it exists unless you let them know. So how do you reach out customers? That's what we're going to cover in the next session in 2 weeks. Have a good evening, everyone.
Good evening.
Good
Thanks everybody
night.
for attending.
Thank you for attending.